Welcome back to another episode of the Hospitable Hosts podcast. I'm Ethan Brown, the General Manager of Asia Pacific here at Hospitable, and today I'm super privileged to have Sally Henry, Vice President of Business Development at Keydata, joining us. Welcome, Sally.
Thank you so much for having me, Ethan. Delighted to be here.
Awesome. I'd really like to just start, I guess, at a super high level and just touch on what is Keydata, what do you guys do, and what do you do there at Keydata?
Okay, perfect. So at Keydata, we're a data company first and foremost. The clue is in the title, but we're a little different to other data companies. So we integrate with property management systems and large property management companies all around the world, and we take daily reservation data. And for property managers that are connected with us, we offer access to a dashboard which has a wealth of business intelligence tools. It really is the view to your business to understand what is happening. But then we take everyone's data and we aggregate and anomalize it for market benchmarking. So if you're sat there saying, well, I know how we performed this last weekend, but how did the rest of the market do? Then you can go and have a look to see how you're performing compared to the rest of the market. So it really is those questions that you sit and ask yourself. So in addition, we do scrape the OTAs, so Airbnb and Verb on a daily basis to get a broader sense of the market. So if you need a view of what is going on around you, then access to data through the Keydata dashboard will give you that ability to see what is happening in your own business and around. So that's Keydata. We work with professional property management companies to help them navigate through the ever-changing markets that we're seeing.
Awesome. And what about yourself? What do you do in your role there?
Okay, so I joined Keydata just over 2 years ago to help internationalise the business. Keydata is almost 7 years old now, and had really built up a huge brand and reputation in the United States, and they wanted to expand outside of the US. So I built up a team. So we've worked across EMEA, Australasia, and then going into LATAM as well, to effectively go out and work with partnerships through property management systems, and finding the large property management companies and building almost a global co-op of data, so we know exactly what is happening in the short-term rental market. So I've been leading the team to build that expansion outside of the US.
Wow, that's amazing. That sounds like a pretty big job.
Many
That's
time zones that we've been talking about, but it's good fun, and it's also amazing to find the similarities across the globe, but there's also some really interesting niches and a different vibe and culture
yeah.
across the short-term rental sort of industry, which I love. Like, I love getting to learn more about each market as we dive in and meet the people there.
Yeah, definitely. I think as speaking as a short-term rental host myself, I can definitely attest to being in that position when you're first starting out, or maybe you've been operating for a little bit of time and getting to that point where you're scratching your head without that data. You can and all hosts should have the ability to I guess take a look at their neighborhood and get a bit of an idea of what's happening and what's going on in terms of the data, but to be able to have access to that kind of global level data is super important. You mentioned Australasia there, and like being an Aussie hospitable host myself, I'm really keen to dive into the Aussie market a bit more. So I'm curious, what are some of the more surprising trends you've observed in the Australian short-term rental market data over the past year?
Yeah, I mean, we've been looking into it. I know you're in peak season right now, but we've seen this really flat occupancy across the board, which a lot of that is born out of the supply. So as more supply comes into a market, your share as a property manager or as a property owner gets less. So effectively, yes, the market can be more buoyant, and you can look at some headlines going, "Great news! There's more people in the industry." But what that means for you sat there as a property manager means that your share suddenly got harder to get. So those occupancy figures that we report on, we always report on guest occupancy at Keydata, and it's an important metric to understand. So a lot of people will talk about occupancy. If you're just scraping data, you can only really report on calendar occupancy. You know if it's available or it's not available. With Keydata, we understand if it's a guest booking or an owner stay or a maintenance hold. So we
Wow.
report on guest occupancy, and it's really important to make sure when you're comparing your data that you're not comparing, say, calendar occupancy versus guest occupancy, because they're quite different and neither are right or wrong. It's just make sure you understand you're comparing apples for apples. So we've seen like this guest paid occupancy pretty flat. Which means that there's pressure on your pricing. It's interesting across the world, we've seen that this occupancy has been a little flatter, but certainly in Europe, prices have stayed higher as effectively property managers, property owners have decided to sacrifice occupancy for the higher rates. But we've not seen the same in Australia. We've seen this flatter occupancy, especially towards the latter half of this year. But then we've also seen this pressure on prices that that has resulted in lower prices as well. So we've not had the luxury of this offset. There's always a balance between occupancy and rates. The two go hand in hand, and you can't decouple them. Never look at just one for your business, please. Always look at
Yep.
them hand in hand. So we've seen this flatter occupancy in Australia, but we've seen this pressure on pricing. And one thing that's possibly a little different is we've seen a really late market for Australia, like super late, which also that causes pressure on those prices to come down. So we're seeing it as a very reactive market. So on the plus side, going through peak, there will be opportunity for property managers sat there because we are seeing a late booking market. So there is still time to bring in those later last minute booking guests. But that's what we've seen. We've seen more supply in the market, which has meant that your occupancy rates are flat to sort of dropping negative slightly, and that's pressured the prices down. But there
That's
is still time to do something about it.
Yeah, definitely. That's a really interesting observation in that it's definitely something that I think myself I can attest to that we're really feeling that in industry, like as an individual host
Yeah.
with my properties on the Sunshine Coast in Queensland, you can feel that change, but to be able to, I guess, have the broader insight into the data is really important as well, because there's one thing to kind of feel it and feel as though it almost feels like a slowdown in the local market. But then to, I guess, dive into deeper as to why is really interesting. And you mentioned the supply there. Do you have any insight, I guess, into that supply growth? Like, I don't know if I'm putting you on the spot there to ask on like a percentage or the number of listings. Like, it feels as though it's been drastic, and when you just look on the OTAs, it feels significant. Would you have any idea as to how drastic it has really been in terms of that supply increase?
Yeah, I haven't got the broader sense, because what I always advise people to do is to understand the supply in your area, because supply figures can be really broad. So somebody might come on and put a property on and it's only on
Yeah,
for 3 weeks, or it's only on for peak, and then it sort of gets inflated. What's
yeah,
relevant to you as a property manager is what is the supply in your local area that is relevant to your portfolio, right? Because supply might be on there as a single room that's shared and it's still a number on the OTA, and it's like, oh my gosh, we're at 10%, 15%. So it's about
yeah,
understanding the relative supply in your area, which would be a huge tip that I would give to people. One thing I did, and I've just advised my team to do, is pretend you're a guest and go shopping for your own properties and see what comes in, see who are the active performers in your market, because supply may be up 10% in your area, but if it's
yeah,
by people that don't really have either the tech stack, or they're not found by your sort of guests,
yeah,
then it's something that it's about understanding the relative supply, and that's your competitive landscape, because that's what's going to have the biggest impact on you. So I always
yeah.
say,
Awesome.
like, supply figures can be overinflated or underinflated, but if you happen to be in an area where somebody's come in that is directly competitive to you, and even though overall the supply might be flat, it could be really
Yeah.
hurting your business, and vice versa. So I'd be diving into the relative supply into your world.
That's very true, and I guess that leads me to a question: how niche is that data that you can supply from Keydata? Can you break it down in that regard in terms of property type and that kind of thing?
Yeah, absolutely. And I'd also say, please do, unless you have a relatively small portfolio, make sure
Yeah,
you segment both your portfolio, and also the portfolio of the data you're comparing. So you can compare against property type, so whether it's a house, an apartment, you can obviously bring in sleeps, number of bedrooms, but you can also add or exclude amenities. So if you're
Yes.
higher end and you want to include a hot tub or a sea view, then make sure so you get as curated as possible, because it's also super important to use those data points and go and talk to your owners. So one thing people use Keydata an awful lot for is to have a communication or improve communication with their owners. So owners are the lifeblood of all property management companies. It's where we almost start or fail, because supply is so important. And making sure you maintain retention of your owners should be one of your absolutely key things. So having key data there as an information, almost like an independent market information to communicate to your owners, to say, owners, like, we're seeing it's super late, or we're seeing that others have come in and they've really upped their game in terms of the amenities they're offering. This is a way to address, so a lot of owners obviously think their property is the best, and quite, and it could well
Yeah.
be. Being able to say that this, it can take some of the emotion away, to say, look, this is what we're seeing the market's doing, so we would hugely recommend that you accept either shorter breaks or change, or add an amenity if that's possible, or accept pets if they don't, like, because you can start to present some independent market data. And then and equally around pricing, and how do we change pricing? If you can show the owners that markets are either trading late, or, in some cases, if you're a huge property that's unique, you will be you'll be booking a lot earlier than the trends, and being able to communicate with a real data, with some cool graphics to owners is really important, and one that should be fundamental to how you manage your business.
Yeah, definitely. I think those conversations with owners can be so important, especially when they're having to make decisions alongside you in terms of their short-term rental business. And I think the same can apply for self-managers as well, making decisions within your business. And one that I can think of personally, where the data helped to make a decision for myself, is potentially increasing occupancy of one of our properties. So we had a property that had the ability to have more bedrooms, and we were tossing up whether we should or shouldn't, I guess, take that extra occupancy, knowing that more people, more guests can mean more work. But then when we broke it down, similar property in the market of where that property actually is, where if it could take 6 or 8 people versus 12, seeing that what you're talking about, the how far in advance people book, and then also the nightly rate changes, it really helped to push it across the line for us, and we could really actually make an investment decision at that time to say, well, this is what we can expect if we make this change physically at the property alongside with the listings, versus if we were to not, and like we can then weigh up the costs of making the change versus the benefit. So that's a little
Yeah,
example I can think of.
yeah. That's incredible. And that's what we say. So our rental projections tools will allow you to say that. And you can then present a case that is a purely commercial business case, saying, if this is the opportunity based on real data, and that's the way that you are showing that you understand the market and that you're adding value to the owners that you are navigating through for them, with
Definitely.
experience and with some real quality tools.
Yep, definitely. I love that. You mentioned guest occupancy. I'm curious if there's any other key metrics that short-term rental operators should be tracking to ensure they're staying competitive in the market.
Yeah. Yeah, absolutely. So I always call it the big five if we're going hunting. So we've got our rates and occupancy, which go hand in hand. You've got the metric that comes out of that combination called RevPAR, which is effectively a fancy term for revenue. And what that is, it's a combination. When you multiply your rates by your occupancy, you get effectively your RevPAR. Now, this really is probably the most important metric in your business, because it's what revenue you're taking home at the end for yourself and your owners. So it's really what you're judged on. So, if you've got your prices right and you get that balance between occupancy and rate, you'll be pushing your RevPAR up. So if your rates are too high and your occupancy drops, your RevPAR is going down, and vice versa. If your rates are too low but you're getting high occupancy, could you have pushed them? So this is like the balancing magician act, this RevPAR. So RevPAR is a reflection of those two. But then you've got your other two, which I would say your length of stay is super important to understand. So if your length of stay is contracting, and to be fair, post-COVID around the globe, we saw this contraction of length of stay everywhere, because as we came out of COVID, everyone wanted to be away for as long as possible. If you were locked down, if you're in a geography where you were locked down, it was like, okay, I need to get away. And then obviously it's come down as as sort of disposable income has become spendable on like either hotels or cruise or international travel, then obviously people's spending habits on certainly on short-term rental or domestic has maybe navigated or pivoted a little. So we've seen length of stay contract in most markets, and it's settled down this year. So in Australia, we're looking at an average length of stay of about 3.8 days. And again, this differs by region and it differs by property type, but that's your average. And if you think back to even probably 10 years ago, the average was like that 7 night, that pure 7 nights.
Yeah.
So we've seen this real contraction. And what it is, it's about understanding. So if length of stay does contract in your area, you're just going to have to sell more to stand still with your revenue. You're going to have to potentially spend more or have different operational sort of support around your business. If you're doing more shorter length of stay, you might have trap nights or orphan nights if you're doing less. So it's one that you need to understand to operationalize your business to the optimal level and to make sure you are pricing right for those shorter breaks, because your costs might be higher. So, the market will often dictate that length of stay sometimes. You can obviously encourage longer length of stay with pricing strategies and your marketing, but effectively we've got this market dictating what it wants and what it's looking for. And as we're heading into some of these macroeconomic headwinds around the world, then people's disposable income, people seem to be wanting more for less, which is often the case. But equal, we're seeing people are still travelling, but there are some are downgrading in property size and some are just staying a little less. So they're still happy to travel. And we just need to have to be able to react to that market, because if not, hotels are there offering like the 1 nights or the 2 nights. So length of stay is a super important one to understand what that impact is and make those decisions with your owners. And that's again using sort of that forward pacing booking to say what's coming in when, and quite often longer lengths of stay but further out, which isn't a great surprise, because if you're needing to stay for longer, you want to make sure you've got the right property. But as we get closer to departure, we see those lengths of stay shorten as well, as people are making more spontaneous decisions, say, right, let's get away.
Yep.
So, it all makes sense, but sometimes taking that step back in your business to kind of look down and say, what are the lengths of stay for those booking out, 6 months versus a month, you'll probably see, okay, they get shorter. And depending on the type of properties that you're doing. So again, segment your data and understand what this means and have that like narration with your owners. One thing that I saw, I think, of the growing segments, when you're looking at length of stay. So now in Australia, a third of bookings are staying just 1 to 2 nights, and that's a
Wow.
growing segment. The
Wow.
6 to 8, which is like historically the tradition, is just under 12%. So
Wow.
there's
That's
a
incredible.
real, yeah, it's a real drive. 3 to
Yeah.
5 days is pretty flat, but we're still losing ground on that 6 to 8 segment, and it's going into that shorter 1 to 2 nights. So it's one to
Interesting.
keep an
And how does that, like the 3.8 length of stay, and those trends you're talking about, how does that compare globally? Is that a trend you're seeing globally, or is that something that's
eye.
really being focused in Australia?
It's a trend we're seeing globally. So we are seeing that 7 to 8 day, which is, or sort of 6 to 8, I think our segment is,
Yeah.
but it's really the 7 day. We're seeing that continue to contract, and it's going into that shorter booking window. And some of that is like global travel is back, but as I said before, so is hotels. So everyone's got an
Yeah.
option now as to where they go and what they want to use short-term rentals for. And I think the other thing just to think about or to bear in mind is post-COVID, everyone wanted short-term rentals, and they came away from the hotel choice because they wanted their own, inverted commas, safe space in their own
Yes.
short-term rental, which also meant we opened up to a whole new segment of consumers who were normally staying in a hotel, and they've tried short-term rentals, and some will have stuck, but they might not stay as long. So, it's not always a bad thing. It's about this market dynamic that is driving the demand, which we need to navigate and make sure we're offsetting the costs well enough. So there's more opportunity as well, but make sure it's priced. What I see some property managers around the world doing is with these shorter durations, where they know they've got a capacity on the check-in day or the check-out day, they're offering upgrades, say check-in early at midday, and and it's quite a small cost, but there are some opportunities for extra revenue with this sort of disparity in some of the stay lengths, which again, if you have the capacity to explore as a property manager, I'm seeing some people make extra revenue really successfully around a market that has sort of just become a little fragmented at certain times of the year.
Yeah, awesome. I think on that, I think it would be remiss of me not to mention our new upsells feature at Hospitable. So we're now providing the ability for Hospitable users to automate a lot of those offering of early check-in, late check-out, that kind of stuff. So there's definitely the ability to increase your revenue with, I want to say minimal effort, but potentially having that automated for you. So if you haven't checked out upsells, I know it's quite recent. Please jump into our help center and check that out, because that's a great option to look into what Sally's talking about there a little bit further. Sally, you touched on upcoming potential headwinds, and so I'm curious how you see the Australian short-term rental market evolving over the next few years. Like we've talked about the past and COVID and what was. What do you see coming forward, and what role will data play in that evolution?
Yeah. There's probably a few things to navigate. Obviously, regulation is so hot across the globe, and rightly so. So this is about understanding your landscape, a little bit like the economy. You can't necessarily change it, but understanding it has never been more important. So on the regulations, what I would absolutely urge anyone to do is to work with ASTRA or an association to understand what regulations are potentially coming your way, communicate it with owners, have a plan. It can change quite quickly depending on governments changing or local councils. So I would say, rather than hide from it, which is everyone's natural, and probably thinking, oh gosh, this is coming, it's just something else. Get ahead of it. Speak to your local, I call frenemies, competitors, people that you're working with, because this is I say battle. This is something I think the short-term rental community needs to come together on. Again, we work around the globe, and it's a common problem, obviously, for many countries at different times, and it's really a political game. But all we've seen in areas where we've seen short-term rental rules implied rigorously is that it's the hotels that win out. So as a short-term global community, we need to come together and help. And we help fight with data to try and explain the good. Like for short-term rentals, people come into a community, they go to the local bars, they eat at the local restaurants, they add value to the economy. And we need to speak with a common voice. I think one of our issues as an industry is everyone hears short-term rental or vacation rental. We don't have one common name. So when someone might say it's an Airbnb, someone might say it's a short-term rental, but I've never really heard a guest say I want to stay in a short-term rental, or say I want to stay in an apartment or on an Airbnb. We don't have this commonality of our own sector. So I think coming together to understand regulations, but if you're operating in an area where regulations are coming in, I think don't be naive to think they won't come in. If they've been muted and they're that political, there's a high chance how you navigate them and how you communicate. And what we're seeing is guests aren't hugely bothered by these necessarily. If they want to go, they've just kind of Googled, go, oh, let's go here. It's your owners that you need to really support through this. Obviously, as a community, how you get through. So I think we've got regulations coming our way. We have more competition than ever, just on that spend of dollar. And through economic headwinds, then effectively people want more for less. It's a common thing, but owners need more for their revenue. So property managers are on this really fine balancing line. And the other thing I've seen in fairly surprising stat, it's higher than I've seen in most places, is the percentage of bookings we're seeing coming through the OTAs in Australia. So we're sat at around, let me just double check. So Airbnb bookings are over 50% of bookings through Keydata clients are through Airbnb, and that's growing, and 25% is through booking.com, and that's growing at the expense, if you like, of direct. So one thing I would urge property managers to understand is, if your growth is through the OTAs, when booking through an OTA, we tend to see later bookings, shorter durations, and slightly lower ADRs. So it self-perpetuates. So I love the OTAs, and I think accessing their platforms is incredible. But just understand if that growth is coming for your business, what impact that might have on your traveller behaviour. So you may start to see later check-ins, you may see shorter durations, you may see pressure on your ADR. So this is just, as the market gets a little softer, you do need to turn and understand what levers you've got to bring in that occupancy. But understand if it is more down certain OTAs, understand what those are. And there'll be others. And again, it's about understanding the type of booker you're expecting so you can price accordingly. So if your pacing is becoming later and later, do you hold your nerve with your pricing? Do you know it's going to come in anyway? Or do you feel you have to push those rates down? So I know it's a fine juggling act, but the data is there to help people. And that's one thing with Keydata, that we try and visualize your data so you can make forward booking decisions for your business rather than going away and trying to dig into the data. It is there for you to make those decisions. So there's a few things to navigate in a softer market, but it also means there's opportunity as we head through peak, that we can still make a difference and we can still see these bookings coming in, even if they're made super late. So I say that late booking trend
Awesome.
is one I've seen. I think
Yeah.
in Europe we're sat around 44% booking to leave within 14 days. But in Australia it's 46% of reservations
Wow.
have been made to leave
Wow.
within 14 days. So
Wow.
what to
That's
play
really
for.
interesting. Yep,
Mm.
a lot of opportunity is what I'm hearing there. That's great.
Yes.
I love.
Positivity, a lot of opportunity, and there is a lot. Let's be fair. Like 40, almost half
Yeah,
the bookings coming in within 2 weeks. There is a lot to
yeah,
play for. There's an awful lot to
yeah,
play for.
yeah. Awesome. I love that observation too about the different channels that reservations are coming through. I think for me, it's a great reminder because I think working with people who are using direct booking websites day in day out, it's a little bit, it can be forgotten that not everybody is using direct booking websites yet. Some property managers and self managers have a huge reliance directly on maybe one channel. So I think that's a great observation to think. Maybe it's something that you should be looking at, especially if the market is a bit softer. Consider your options. Consider if if you're not using a direct booking website yet, maybe it's something you should be looking into. We did a 2024 Hospitable year in review, and one of the really interesting bits of data from that was that direct reservations through Hospitable grew a pretty awesome 440% over the year. So that's a pretty epic growth. But then at the same time, there's a lot of customers that aren't yet using direct websites. So a little reminder to check that out if it's not something that you've started
Yeah,
on that journey yet.
100%. I think controlling your guest experience from start to finish is super important. So direct is there. It should just be one of the levers you can use. You should be able to sort of almost press any lever that you need to engage at certain times, depending on your portfolio, depending on your market, depending on your booking pace. So knowing
Yeah,
you have
definitely.
those in your armour is something that you should be building up, that diversity if you can.
Definitely. I think we've got time for one last question. I'm curious to know if there's any markets within Australia that you're particularly excited about for short-term rental investors in the near term, and that a market in that term might be a particular region, or it could also be potentially a property type. Is there any particular markets that you think could
It's
be
a million,
exciting for property going forward?
it's $1 million question, Ethan. This is what everyone
Asking you to predict the future.
Yeah, listen, I mean, and this is where we use a rental projections tool, because this is why you need
Yeah,
to get really dialed in. I mean, we've
yeah.
seen some really fascinating or interesting metrics for Tasmania this year. So we've seen Tasmania has the highest RevPAR. So if we're looking at just one number and saying
Wow.
like, okay, RevPAR, when you're combining your rates and your occupancy, is outperforming the rest of the market. So that's one that we've kind of kept to look at. But then equally, the Sydney area, no great surprises, has the highest occupancy and the longest length of stay. But then equally, it's got the shortest booking lead time because it's sat against some of its urban competitors. So,
Yeah.
like, again, this is getting dialed in. Find the property type that you are interested in servicing. So is it luxury? Is it mid-market? Is it mass market? Is it large properties? Is it small properties? Go and have a look at the ecosystem and understand what is the supply. So my biggest I suppose, recommendation is, what is the supply and your competition in that particular area? Where do you think there's a market that is underserviced? Because one, you have an owner pool then, and two, you'll have that guest pool. So genuinely do your research so that you understand who else is interested in the market. You know, what's your competition? How does it sell? What's presented on the OTAs and how is it presented? Because it's not just guests, it's about your owners bringing that pool as well. But then obviously you've got to offset it. What are the accommodation costs? What are the costs to buy those properties there? What's your length of stay? What's the seasonality? Have you got cleaners around? So I think it's about really understanding all of them. Don't run away with one headline of like the RevPAR's highest here, let's go do it, because
Yeah.
there is more to it, obviously, than that. So
Yeah.
there are
So
pockets of
we
opportunity there for sure.
definitely. So we won't be emailing you after we buy a property investment in Tasmania next
I
year.
mean, you know,
No.
it's there. It's there. It's the most
Yeah.
important.
For sure. Yeah, definitely. I think there's so much that we could go into there. That might be the topic for the next podcast, because I'm sure we could talk for half an hour about that. But that's so excellent. Thank you so much for your insight today, Sally. I really do appreciate the conversation, and I'm sure all of our listeners will get a lot out of it. If our listeners want to get in contact with you, or any hospitable hosts out there want to have a discussion, what's the best way to do that?
Oh gosh, I'm available any which way. So LinkedIn, I'm active on LinkedIn. My email is sally.henry@keydatadashboard.com. Sorry, it's a
Awesome.
long one, but drop me a line at LinkedIn or come through. Always happy. I'm happy to be everyone's data friend. If you just want a chat or about the markets, please do get in touch.
Love that. Thank you so much. Thanks, everybody.
Thanks, Ethan.